The U.S. markets are on the rebound today after some behind-the-door comments from the U.S. Treasury Secretary. He called the trade war with China unsustainable. Let's bring in Jed Ellerbroek. He's a portfolio manager with Argent Capital Management. Thanks for joining us today.
Hey, thanks for having me.
So did you see this comment as a subtle nudge from Washington to calm the markets?
Yeah. I mean, I guess the cynic in me thinks that the administration understands that, their kind of self-created trade war has caused the markets to go down 15 or 20%, depending on your favorite benchmark. And, this today was meant to be kind of a hopeful indicator that perhaps, good news is on the way. And, hopefully some trade negotiations allow these tariff levels to be pulled down and better economic times ensue.
Do you think, though, it's enough to quell what we've seen as, I'm going to call it panic, for the last month or so? Do you think it's enough to quell it in a longer term?
No, I don't. It's enough. It's enough to give people reason for hope today, but I don't think that it has a lot of staying power. I think every week that this uncertainty goes on kind of drags down economic growth incrementally. And so the longer this lasts, the greater the pain is.
Let's talk, Jed, about the comments that Donald Trump had for the Fed Chair Jerome Powell. He insulted him, said he needs to cut interest rates, basically trying to demand that he do so, threatened to fire him. Can you explain the market reaction to that situation?
Yeah. I mean, I think just basic economics 101, an independent central bank is really important to the good functioning of a country's economy. An independent central bank can think long term. It doesn't have a lot of the political considerations, of course, that politicians and leaders do. And so an independent central bank leads to higher economic growth, leads to lower inflation, leads to better outcomes for its people and businesses. It's desirable, of course. Okay,
so you basically, investors, were they, I mean, they can't be that surprised with that coming from Donald Trump, but it did make them nervous.
Yeah, absolutely. Somebody asked me last week, what effect do you think firing Jerome Powell would have on the markets? And part of me thinks, well, geez, we've kind of ignited this global trade war. It's taken the markets down 15%. I think the markets would be down more if investors believe that these new rules, these new tariff rates were going to persist for, say, the next 5 years. I think the markets will be down a lot more in that circumstance. The market, I don't think is, the market doesn't believe that. So I think the market is taking it in stride isn't the right phrase, but, some version of that. Perhaps the market would take firing the Fed chair in stride. But yesterday's response in the market to just Trump's tweets maybe indicates otherwise.
All right. Let's talk about guidance that we are getting or not getting from companies. A lot of companies are now saying we can't provide the guidance because we really don't know what's going on, what Washington's going to decide to do. What's your take on this trend of not providing guidance, and how do you think that affects investors?
Yeah, we're still early in earnings season. Less than 30% of companies have reported earnings so far here in the United States. But I think the early trend that we're seeing is far fewer companies are willing to provide guidance for next quarter or the entirety of 2025. And I think that's directly tied to the tariffs, the trade war, and all the uncertainty that it creates within supply chains and also customer demand. So I think that's a rational response from businesses. United Airlines is one that really stuck out to me. They did actually provide guidance, but they provided basically two sets of guidance that looked miles apart from one another. Not sure what good that does for investors, really. But yeah, businesses are responding to the uncertainty by hedging their bets, being cautious, and being unwilling to make commitments about the future, because the future is probably going to look quite a bit different than the recent past, including this first quarter that they're reporting just now.
Let me ask you what you think all of this sort of movement and the up and down is doing for what traditionally we see as safe places to put money, right? Treasury, bonds, the American dollar. What do you see happening there?
It's it's unusual to see U.S. stocks go down, U.S. bond prices go down, and the U.S. dollar decline all in the same day. That doesn't happen very often, and that's happened a handful of days over recent weeks. And that is obviously discouraging news for U.S. markets. It means people are pulling money out of the states, not just allocating from one asset class to another. It's disappointing and concerning to see.
Got it. Let me also ask you what you're watching for next in this trade and tariff situation.
Yeah, trade deals between countries take years to negotiate. The Trump administration has given a 90-day pause on its country-by-country high tariffs. I'm not sure what they'll be able to accomplish in 90 days. You know, they've said India is going well. They've said Japan is going well. They said, I think Besson said today that China was going to be a slog. There won't be full-fledged trade agreements completed and agreed to by both countries in the 90-day period.
Yeah.
So what will they agree to? What will allow Trump to come down from these super high tariffs, 46% on Taiwan, et cetera?
Sorry, Jed, I'm sorry I got to cut the conversation short. I got to leave it there because I'm out of time, tight timeline right now. But thank you very much. Appreciate you joining us on the program.